Good morning, and thanks so much for tuning into the Trade Setup. I'm Neeraj Shah. It's a busy week. It's while it has a break in between for the Indian markets tomorrow, but it's a busy week nevertheless. Let's take stock of the global news flow first. U.S. inflation expectations fell to the lowest in over 2 years. Does that force the Fed's hand this week? Remains a question to be seen. U.S. stocks fell though, with risks rising from the United Auto Workers auto strike. Canada postpones trade mission to India as tensions rise between the two. US airline stocks tumbled into bear market as soaring oil prices bite hard. And in other news, India's parliament special session begins. Lawmakers will have 5 sittings from September 18 to September 22nd. So that's the global news flow from an investing perspective. So what did the US markets do in Friday's session? Well, certainly a bit of a crack, though I must say the futures are stable as we speak for now. But there was a gash and it has impacted the Asian sentiment for sure. The other factors will come up on your screen. I doubt that there has been dramatic changes in the volatility. Yeah, volatility VIX about 15.76, actually a bit higher if you will. Dollar index though 104, 105. The 10-year yield moved up to 4.34 as things stand as of 7:30 a.m. today. Let's see if post Fed these things change a little bit. The GIFT Nifty, what is it indicating? Is it indicating a start which is flattish again? Yes, it is. Let's see if this is how it holds out. Now, what happened to our markets on Friday is also important. Nifty 50 increased by about 67 odd points to end at 20192, half a percent gain. The bank Nifty also gained by about half a percent, with HDFC Bank leading the chart, 1.15% higher. Nifty Auto had gained the most, followed by Nifty IT. The line has gotten repeated, but excuse us for that. So that's the key thing, that this is what sentiment, this is what the picture was when it comes to Friday. Now, can we get out of this plate? So the point is, viewers, we've had a decent move the whole of last week and the week before that. Can we, because of the fact that it's a week which has got 4 central banking actions, including the US Fed, and the fact that oil prices are higher, the US markets have also chalked back a little bit in Friday's session. And if this strike, which is continuing between the Auto Workers Union and some of the key auto majors continues, then could it continue to have a bearish impact on the US markets? And therefore, today's session as well, because we have a break tomorrow, but the world markets are not, could it be that we will not have a very sharp move on the higher side today, despite the momentum being on our side? I would suspect that that could be the case. I certainly have been saying now for the last few days that the risk reward is not in favor of leverage longs. Been going wrong per se. If you think of half a percent or a percent gain as being a great risk reward conducive outcome, then certainly this statement has not aged well. But the corrective moves, the way when they come, could take off a large portion of a leverage long. So therefore, on the Nifty at least, it's probably not the best time to be levered longs. A lot of people had asked me last week, and by the way, I must confess, I cannot predict markets. I don't think too many people can, to be very honest. But I'm just giving you what indicators are saying about the markets. This is not my own opinion per se, but I must say that a lot of people had asked on the trade setup about whether it's a good time to go leverage short. And we had mentioned that the indicators didn't indicate that it was a good time to do so. I hope that that has also helped. Now, banks, IT, and metal stocks are looking promising due to the pullback possibilities and the fundamental performance. Why do I say fundamental performance for metals, for example? Is because a bunch of these commodities have actually risen. And you saw what happened to Hindalco, for example, right? Last 2 days or 3 days, it gained quite substantially, primarily because of a number of news-based events, but also because of the fact that there is a bit of a rise in some of the base metals, which might be conducive for some of the non-ferrous companies for sure, if not the ferrous companies. And therefore, as a result of that, I believe cement, which is a favorite. There's a Morgan Stanley note which says it prefers cement over steel. They seem to be constructive on cement. But if indeed all of these costs have risen, coking coal, coal prices per se have moved up, oil prices are higher, I would reckon it largely should be negative for the input costs for some of the cement names as well as the other producers. And therefore, one should be careful when it comes to trading positions in some of these names. On an investment side, I think cement looks rock solid because of the infra spend, but on the trading side, just please be a bit careful. Now, in light of all of this, what are the stocks that one should keep in mind today? Firstly, I mean, stocks that moved in Friday's session, liquid movers at least. Bajaj Auto had a big move on that BOFA upgrade. ICICI Prudential Life Insurance similarly 4.5% up move on volumes which are two times the averages. Bandhan Bank moved up 4% amongst the highest gainers on the Bank Nifty with volumes better than the normal averages, as well as Coforge, which moved up 3% with 1.7 times the volume. So these are the liquid names that people should keep in mind, price volume buzzers. Then the newsmakers, government has approved a 45,000 crore defense equipment procurement package. So the likes of HAL, Bharat Forge, L&T, shipyard stocks, all of this could be in focus. Why do I say this? Because there is some announcement about light armored multi-purpose vehicles and integrated surveillance and targeting systems. So I think stocks like or companies like Bharat Forge are into that, the high mobility vehicle and the gun towing vehicles for mobilization. So Bharat Forge, etc., are in focus. L&T could be in focus. Next generation survey vehicles for Navy, maybe the shipyard stocks come in focus. And there is an official announcement of 12 Su-30 MKI aircrafts with associated equipment from Hindustan Aeronautics. So for HAL, there is a specific announcement done, and therefore I reckon that some of these stocks could certainly be in focus in the session today. By the way, 45,000 crores means it's a large number. And there is another beneficiary of 45,000 crores. I'll come to that in a moment, not related to defense. But first, in order of importance, the second stock that I think could be in focus is Tata Steel. Tata Steel and the UK government have announced an agreement to invest in an electric arc furnace steel making at the Port Talbot site with a capital cost of 1.25 billion pounds, inclusive of a grant from the UK government of up to 500 million pounds. So this seems to be a net positive for Tata Steel. Now, as per the company viewers, remember the switch to EAF would bring in about 150 to 170 pounds per ton cost savings, raw material plus OPEX. Now, adjust this for average losses in the business, implied net EBITDA per ton about 100 pounds per ton of range. Cost saving could be higher if indeed the offshore wind generation also comes into play. But I was reading some notes, and I think a Spark note, for example, says that from a valuation standpoint, the implied drag of the UK biz on the current market price is about 5%, right? Just keep that 5% in your mind, right? Now, in a bull case, the loss of whatever number it is, say 1600 crores or thereabouts, actually swings into a positive, which is a big driver, which possibly drives whatever 10, 12, 15% upside. But this is way later in the life cycle. So fundamentally, purely on the numbers basis, this may not seem as big a trigger. I believe, and I might be wrong, but I believe that from a sentiment perspective and from the fact that the UK government has given a grant as well, I would reckon the street would take this positively. Maybe a pop-up which cools off a little bit, or maybe not. So I certainly believe it will start off well. So watch out for Tata Steel in the session today. Bharat Electronics is the third one. It's bagged multiple orders worth, I think, close to 3,000 crores. And the order from one of them orders is from Cochin Shipyard, which is 2,119 crores for supply of various equipment. So BEL could be in focus. That bulging order book swells only further. So watch out for BEL. Watch out for Adani Energy Solutions. Promoter entities Gel Perry Trade and Investment has acquired 2.15% stake between August 16th and September 14th. Now, two things. One, I don't know whether this itself means that there will be a reaction, but we've seen what happened to Adani Ports when this promoter entity buying happened. So, which is why I'm just bringing it to the viewers' attention. Standard disclaimer: Adani Group owns 49% and is in the process of acquiring the balance 51% stake in Quintillion Business Media, which is the owner of BQ Prime, which is the platform on which you're watching this trade setup. So just want to lay it out. Now, I mentioned Hindalco. There's no news over the weekend or post-market hours Friday, but I thought the recent news flow should be put into perspective. Commodity prices are starting to rise, and the company is net beneficiary in select few of them, albeit with a bit of a lag. Novelis inked agreement to supply aluminum beverage can sheet to Ball Corp last week, and Hindalco is also planning to enter into aluminum coaches manufacturing. They've done that tie-up with an Italian firm. And remember, they also have a tie-up with Texmaco. So multiple news flow out there. A few of you might have wondering why is it that Hindalco actually shot up in trade. I just thought I should bring to you the reasons and why Hindalco could actually remain conducive as well. So be mindful of this. Then, like I mentioned earlier, that 45,000 crores has got a similarity, that is today's. Maharashtra government has cleared a package of 46,000 crores for development of Marathwada. 21,580 crores will be spent on the irrigation department. Provision of rupees 12,000 crores for the PWD department as per NDTV. And therefore, I think the Jain irrigation plus pipe stocks plus some of the others would all come in focus. I mean, there could be others. Please excuse me, viewers, if I haven't brought out all the names, for example, in irrigation or all the names in the pipe names. I'm just giving you a broad synopsis of what the announcement is, and very likely the the potential beneficiaries. None of these are necessarily going to bag orders or going to get benefited out of it. But I would suspect that the market may think that these are the companies that will benefit, and therefore there could be a stock reaction. So you should be aware of it. So keep that in mind. Last but not the least, Texmaco Rail. They've approved fundraising of 1,000 crores by way of issuance of equity shares through a QIP and 50 crores by way of preferential issue to promoters. So certainly in the thick of things, railway stock. One more, Texmaco Rail. Let's wait and watch how this shapes up. So this is the other one that you should keep in mind. Now, what else? I'm just trying to see if I've missed something. And the team has uh, that have if the team has sent something else that I have missed out for. Aditya Birla Finance IPO is likely to come out soon. Maybe Aditya Birla Capital remains in focus as well. Yeah, on HAL, not only the announcement that I made, but which is worth 11,000 crores, but I have plans to buy 100 more Tejas aircrafts as well. So that could be interesting. Suzlon is entering a Nifty Alpha 50 index. Watch out for that one. AU Small Finance Bank, DAM Capital initiates with a buy with a target of 980. Watch out for that one as well. These are the other interesting pieces. Keep an eye out, viewers. Lastly, before we wrap up, on Vodafone Idea, a stock plus Indus Tower had gained remarkably. There was some expectation of some announcement over the weekend. There are lots of WhatsApp rumors floating or doing the rounds as well. That hasn't happened. And therefore, could a few long positions unwind? Maybe. So do watch out for those stocks as well. I must have missed out a few things, so please excuse me for that. But this is the long and short of what I believe could be amongst the key things that people should keep an eye out for. Now, in terms of conversations on BQ Prime today, the big one is, of course, Christopher Wood. He's the global head of equity strategy at Jefferies. Joins us on our special show, Worldview, today at 10 a.m. You want to tune in for that. I thought a very interesting conversation on multiple things, global and India. Remember, India is one of Chris Wood's favorites, so it would be interesting to hear Chris talk about that. Do try and log in. It's a conversation that we've done and recorded, so I know that it's turned out to be a good conversation. Do try and tune in for that. Normal conversations with regards to the trading talks continue today. And starting today, we're trying to get you one more informative piece. My colleague Agam Vakil will bring in the derivative show, the FNO show, which was always our proprietary right when we launched Bloomberg Quint. And we'll try and focus on some aspects around futures and options and how to trade some of those. No gyan, only actionable information. You might want to tune in for some of that. So the FNO show with Vinay Rajani, he's senior technical and derivative analyst at HDFC Securities, hosted by my colleague Agam Vakil. You might want to tune in for this as well. Thanks so much for tuning into the Trade Setup. Have a great day ahead.